Very good afternoon, everyone. We are going through some technical difficulties on streamlining this on YouTube. Please excuse us for a couple of minutes. Sarifat, can you try if you can share your screen meanwhile?
Are you able to see my screen? Can you hear me?
Yes.
Are you able to see my screen?
Yes.
Okay. And you prefer me to go from slideshow as opposed to showing this side?
No, I think okay. Yeah, I can start. Good afternoon, everyone. Thank you very much for joining. We are going through some technical difficulties in streamlining this through YouTube channel. We are directly coming on live on YouTube directly on AG FinTax channel rather than on the given specified link due to some technical difficulties. We will be sharing this link to everyone because few people might be missing because we are not live streaming on the given YouTube channel link. Yeah, and let's get into the topic. Today, we are introducing a brand new topic, R&D tax credit, research and development tax credits. As you know, AG FinTax has been offering different types of services, but we also started offering R&D tax services. And today, I am here with my team. Before I get into explaining about introducing my team, I would like to talk briefly about our organization. It's me, Anil Grandi. I'm the CEO of AG FinTax. And here is my journey. So I have 20 plus years of experience in the core tax, accounting, and finance fields. I worked earlier with Amazon, Starbucks, PricewaterhouseCoopers, and Sun Edison. I have been serving as Forbes Finance Council member for the last few years, and I have written a lot of articles also. And with me, a big team supports me all the time. I have a team of CPAs, chartered accountants, and other finance professionals. We have many CPAs on the floor. But today, we are going to talk with our tax manager, Serifat Aremu. Me and Serifat both are based at Dallas. As you know, we have operations US wide, and we are going to today together going to discuss about R&D tax credits. Before I get into the topic, I would like to give a small disclaimer. AG FinTax is whatever we are sharing today. We are sharing our best knowledge and wealth of information. Sometimes it might not be applicable for your scenario. We strongly recommend you to work with an accountant or CPA or at least talk one-on-one to ensure those recommended strategies are applicable for you. And AG FinTax doesn't hold any responsibility for directly or indirectly using this data at your personal level without contacting us on one-on-one because from person to person, the requirements and applicability might be differing. And AG FinTax is a professional service firm. We are teamed up with many taxpayers, tax professionals, CPAs with an intention and objective to maximize tax savings. With our collaborative and consultative approach, we assist with the heavy lifting of detailed, science-driven solutions required to maximize efficiencies. This is what about AG FinTax. And today we are going to talk about R&D tax credits overview, eligibility, and it means who are eligible to claim this. What is an R&D tax credit? Who are eligible to claim this? And what are those qualified research expenses which can be eligible expenses? And how IRS treats this? We will also go through a bit more focused on software industry because we know that most of the viewers are software at this point. And we do also cover about R&D study life cycle. What are the steps we do in general? What are the steps involved from the beginning till we complete the R&D study? And we also would like to cover section 174 rules, which are almost similar to R&D. And if there are any Q&A, we would love to take the Q&As on that from the comments box. Yeah. And I request Serifat. Serifat has more than a decade of experience on R&D tax credit, and she heads our R&D tax division. And I request her to take over the presentation from here, but I will be also adding my comments as we move on. Serifat, please take it over. Thank you.
Thank you, Anil. Can you hear me? Good afternoon. All righty. Good afternoon, guys. As Anil mentioned earlier on today, we'll be talking about research and development tax credits and a little bit of section 174. So what is the R&D tax credits? This is considered a tax benefit by the IRS for keeping technical jobs in the United States. This credit is a dollar-for-dollar credit, which gives you benefits to maximize your investments on research and development. You can use the credit, plug it back into your business to get some return on investment, increase your earnings per share, and you get about 6 to 10% back of your investment on the credits. So anything from 6, 7, 8, 9, 10% could be your qualified expenses could be your credits. And these credits can be carried back 1 year or 20 years forward. The thing here is that you have to go back 1 year first to look into your prior year in the open years and 20 years forward. And if you're not able to exhaust your credit in the 20-year period, it's a lapse. So it's use it or lose it within 20-year period. And this is also applicable for, the credit is open to all business types, not just corp, but S corp as well in partnership. And we have so many states offering R&D tax credits, about 35 or so offering tax credits, or even more offering tax credits. Next, I would like to talk about determining the eligibility of the R&D tax credits. First, for a company to qualify for R&D tax credits, there are some criteria that needs to be met. We call it the 4-part test. And the first one here talks about permitted purpose, which talks about your activity being related to development or improvement of an existing business component. If it's a new development, it doesn't have to be new to the world. It doesn't have to be new to your industry for it to be qualified. So far it is new to your company, so far it is new to your employees, it will be considered new. But if it's an improvement to an existing business component, the improvement must come in form of its function. Are you trying to improve the functionality of an existing product or process, or you're trying to improve the performance, reliability, or its quality? Next criteria will be the technology, which means that your efforts must be backed by hard sciences. You must have relied on, be it physical science, physics, biological science, chemical science, engineering, computer science. You have to rely on principles of hard sciences. The next criteria talks about technical uncertainties, which means that during the life of that project, you run into some unanticipated or even anticipated technical challenges in terms of if you're capable of achieving your goals, or what method or design would you need to implement for you to be successful. After identifying those technical challenges, now comes the last criteria, which is the process of experimentation. Process of experimentation simply means that whatever you do for you to mitigate those technical challenges will be your process of experimentation. It could be anything from prototyping, modeling, simulation, trial and error methodology. Anything at all you did that help you overcome those challenges will be considered your process of experimentation. And the thing is that IRS wants you to consider at least 2 alternatives. They didn't give us the number of alternatives. They just said at least more than 1 alternative. Moving forward from that, the next thing I have here is to talk about the qualified expenses, the qualified research expenses, popularly known as QREs. What are some of the buckets of cost that we include in the calculation? We have about 4 of them. And the biggest one usually is the wages. And this is the wages, the taxable wages, usually box 1 of W-2 of the employees who worked on R&D efforts. The next one is supplies. Any consumables, any tangible property used and consumed in the R&D effort would be part of the qualification. Then next we have a rental or lease of cost of computers. And this simply could be maybe you engage the services of cloud hosting. You hosted some of your activities in the cloud and you have to pay for that subscription. That could qualify as well. And the fourth one is the contract research. Say, for instance, you do not have the capability in-house to do some of your activities and you have to engage the services of a third party. That would be considered a third party. And at that, whatever cost you spent on them on qualified expenses, qualified activities, it will be taken at 65%, as opposed to the other 3 buckets of cost I mentioned earlier on, that will be taken at 100%. And you do not necessarily have to engage a business entity for you to have your contract research. If you have any personnel, quote and unquote, employees who are on 1099 as opposed to W-2, they will fall under these buckets of cost, contract research. Moving forward, we'll try to identify the people on the research efforts who are qualified. Remember, on the previous slide, we talked about the 4 buckets of cost, but I mentioned one first. The first one I mentioned was the employees, and the last one I mentioned was the third-party contractors. So for the employees, we look into them in different categories, and IRS only allows us to look into those who directly perform the research effort, as well as those who directly support them and those who directly supervise them. So we look at 1 level below and 1 level above. And also, these direct supervision or direct support personnel, they do not necessarily have to meet the 4-part test if and only if the direct performers meet the 4-part test I mentioned earlier on. So now, and this is also applicable to the outside contractors. For them, if their services meet the 4-part test, then we can also, pick them up as well. Now, the next topic I will talk about is that why some companies do not, claim the R&D. Some of them will say that, okay, our activities are not innovative, or it is too time consuming. We do not track our time, or it can trigger an audit, or our type of, business classification is not, suitable for R&D. People give all different types of excuses not to, claim the R&D, but that is not the case. Like I mentioned at the beginning, any company who brings new ideas that are new to their company or improve on an existing business component and rely on technology, and they have technological challenges and they were able to resolve it, even if they were not able to resolve it, because the thing with the IRS, the thing with the R&D tax credit is that your credit eligibility is not dependent on the success of your efforts. Even if you're not successful, if you were not able to achieve your goals, you are still able to claim the credits. Moving forward, I want to talk about the IRS environment as related to R&D. Recently, last year, mid last year, the government, the IRS gave out new requirements, especially on the amended returns. The thing with the R&D is that you are able to look back up until the open years, the 3 statutory years, to claim your R&D. If you are able to determine if the risk is worth the effort, you may, actually go back for those 3 years to go look into it. But while amending those returns, you have to identify all the business components, and this is somewhat different from if you're filing it initially. So you have to be able to identify all the business components, identify the research activities performed on each business component, as well as provide all the buckets of cost I mentioned on earlier on, be it qualified wage expense, supply expense, cloud rental or lease of computers, which is cloud computing, or qualified third-party contractors. So you have to be able to, include that in your amended return for you to be, for IRS to even look at your return, to look at your claim of the credits. Also, IRS wants you to put in some effort to effectively allocate your resources to determine which procedural claims to examine. IRS, unfortunately, does not give us any guidance as relates to, sufficient information. They just want you to provide sufficient information, but they were silent on what is actually sufficient. So, but my advice would be give them everything from points 1 to 4 that I mentioned on earlier on. Identify your business components, what activity each business component was all about, and the qualified expenses into different buckets of cost as it may applicable to you. Moving forward, I have the industries. There are so many Go ahead, Anil.
Go to the previous slide.
Okay.
So what we're trying to say here is IRS requires very detailed documentation to prove and demonstrate that you doing a research activities or not, or is the right allocation of the resources happened appropriately or not, and also IRS also needs a documentation in very detailed how you are identifying all the business components, and there is no specific guidelines given that okay, this information is sufficient. Till the IRS gets all the required information, they can go as deep, as detailed as required to ensure that those you are really eligible for R&D tax credits. Yeah. Go forward, Siri.
All righty, thank you, Anil. So in here, I have different industries, different type of businesses that claim the R&D credits. So anyone from, aerospace and defense, architecture and engineering, automotive, software development companies, digital marketing software, manufacturing companies like food manufacturing, food and beverage, distilleries, energy and gas, oil and gas, mining. R&D is being claimed by all various different industries we have. Even, feed mills, ship and build, maritime, they claim R&D, generic drugs, even clothing and apparel, they claim R&D, cosmetics and skincare, printers, all of these companies, claim R&D tax credit. So far, they're able to meet the 4-part test. Moving forward, I want to talk about in the software industry, IT industry as a case study. In here, we have example of developments, example of activities that could qualify. So I have mobile apps, cloud-based applications, legacy application, SaaS, software as a service. And also we have, these could be services that are being licensed or sold to third parties, but R&D credits is not limited to external software alone. You can also have internal used software. But with the internal use software, there are 3 additional criteria that needs to be met. One of them would be it has to meet the innovation test, which means that it is highly innovative. You cannot compare it with something that is existing already. It has to be really new. Also, it has to meet the economic risk test, which means that you have to, it has to be a risky venture for you, either monetary risk, and also it doesn't have to be commercially available, which means that you can find this off the shelf or in the market. It doesn't have to be comparable to what is existing in the market. So that is the 3 additional tests that needs to be met for internal use software. Moving forward, I have some of the activities that can go on for their software. It could be, analyzing requirements. Maybe at the initial stage, you go through analyzing the requirement, trying to understand your client, your customer scope and requirements and specification. Then next one will be designing and creating prototypes. You come in to try to, turn your specification based off of your requirement analysis into a draft prototype to see what it would look like. Then you now go into the actual development phase. You're trying to develop the functional software. After that, whatever you come up with has to go through your support system, the QA trying to test it for you. It could be anything from acceptance testing, all of those testings that you go through, finding any errors, debugging it, and going back and forth, rewriting the code, updating the code as necessary. Before it will go live, that is when you would deploy it. When you deploy it, it goes live. Then you can now have a finalized code being implemented and delivered to your customers. But it doesn't end at that, because inherently you would want to enhance the features, update it from time to time. So that is when the enhancements come in, and this is where the improved business component comes into play. Something that you've already put to bed, that you've already worked on, now you're improving its functionality or its capability or its performance as time, from time to time.
And so adding to that, so technically at very high level, these are the activities we can consider as an examples. So when you develop a product, you may be going through all these steps in developing a product or doing some research. So these are the few examples which you can consider if you are eligible, if you want to check if you're eligible for R&D or not. And if you still have more questions, we are going to cover, but there is a form also available. You can scan the barcode, which you can see in the bottom of the screen. You can submit a simple form to us. We will, based on your inputs, we will get on a call with you, analyze we do a free assessment whether you are eligible for R&D or not. And we will also tell you whether how much money you may be getting approximately. So these are the leads to think if you are eligible for R&D or not. Go through the next slide.
Okay, all righty. After discussing some of the example of qualified activities, I also have here some of the activities that wouldn't fly with the IRS. And some of them is that in any development or any activity whatsoever that is done outside of the US and its territories wouldn't qualify, because R&D is a US soil-based test. You can fly in your expatriates, you can fly in your foreign nationals to come onto US to come do the work for you, and whatever you paid to them could be eligible for the credits. But if your US employees or US third-party contractor fly outside of the US to go conduct the research efforts, it wouldn't qualify because it has to be done on US soil. Now,
so adding to that, adding to Serifat, in simple, the expenses, whatever you are incurring, those are for the US resources. I mean, like the work has to be done in the US. If anything is going out of the country, those expenses might not be eligible for R&D tax credits. And yeah, and also there are any we are expecting, the IRS expect some customization. So you are supposed to do some customization. If there is no customization, then you are not doing anything. If you are just copying something from other resources, you may not be eligible. But there should be some uncertainty, and you want to do something differently, or you want to try something differently, where the final end product is uncertain. Yeah.
Yes. To buttress Anil's points, anything like reverse engineering wouldn't fly. That wouldn't qualify at all. So, or if you're doing maybe some routine maintenance, but if your maintenance leads you to identify, running into some technical challenges and you have to, do process of experimentation on, then we can make a story for that. We can argue that. But if it is purely routine maintenance, that wouldn't fly. Post-release bug fixes, that would, if you're debugging after it has gone live, that wouldn't fly as well, except, like I said, if you run into technical challenges again, then that leads to enhancement of the features. Then we can make a story for that. So anything, user interface and for purely cosmetic design, that wouldn't fly because you wouldn't be able to make any case for it being technically challenging at that point. So those are some of the activities that wouldn't qualify. They're not limited to this, but not to take much of your time, we can leave it at that. Now, I want to talk about a scenario of what your credits might look like, given this example of cost you have. Say you are developing ABC software, for instance, and you are 4 programmers working on them, and all 4 of them, averagely, they were being paid $150, and they sum up to be $600,000. And they dedicate 100% of their time on development, improvement, and an enhancement of the software. So their qualified amounts eligible for the credits would be $600,000, 100% of them, because they spend 100% of their time. Let's assume you have TQA who are supporting the direct performers, and on average, you're paying them $120K in their box 1 W2, and that amounts to $240,000. But they were also doing some debugging for you. They were not focused on qualified activities 100% of time. So let's say they are 50% qualified time spent on the effort. So their eligible amount to be 120, 50% multiplied by 240. And you have 2 supervisors, 2 directors supervising the direct performers. And at that level, maybe they spend only 20% of time because they had other tasks they were engaging in. So maybe the qualified expenses come up to be $72,000. That sums up your total payroll, so total eligible payroll to be $792. And your third-party contractors now, let's say after taking the 35% haircut out of it, you are left with $171,000. And maybe you have something with cloud computing that amounts to $37,000. So your total eligible expenses comes up to be $1 million. The maximum credit you can get will be $100,000. Because if you remember earlier on, I said your credit ranges between 6% to 10% of your qualified expenses. So moving forward, now I would like to talk about the R&D study life cycle. This is how we do it. We first meet with you to give you a complimentary estimate to determine if you'll be eligible for the credit based off of your activities. We will review that with you and give you an estimated value to see if the squeeze, if the juice will worth the squeeze. Now, the next thing would be, how you can utilize that credit if you get it. Maybe you can use it for some, if you're a small business, if you qualify, you can use it for payroll taxes. You can use it you can go 1 year back, like I mentioned earlier on, to offset your tax liabilities, or you can carry it forward if you're a new business and you're not making any profits yet, so that you're not being taxable at this moment. We can, put it back and use it in the next 20 years.
So this is an amazing one. This is whatever money you are spending to develop your product or doing some research and development activities. On average, for the money whatever you're spending, you are getting as a tax credit of 6 to 10% on average. If you're spending $100,000, you are getting a credit of $6 to $10,000, around up to $10,000 on dollar to dollar credit. This credit can be adjusted with your income tax liability. If you don't have income tax liability, it can be adjusted with your payroll tax liabilities, and you can go back by 1 year, or you can carry over for the next 20 years also. So it's such a great support which IRS is giving for the research and development to the business owners.
Okay, thank you, Anil. The next point in the life cycle would be the credit analysis. And this falls into 2 categories. We have the quantitative analysis and the qualitative analysis. The quantitative analysis, that is where we talk about the calculation of the credit itself. That revolves with, crunching in some numbers, trying to maximize what your credit would be. But besides that, IRS also wants you to have some information that will substantiate your claim of that credit. They want to know your story. They want to know what went on. They want to know why you are eligible for that credit, why you're claiming that credit. So for the qualitative analysis, that is where we try to substantiate the credit amount. So, and that talks about the 4-part test I mentioned earlier on, documenting what the project was about, some of the challenges you ran into, some of the process of experimentation, and some of the alternatives you considered along the line, documenting that. And that also brings us to the contemporaneous documentation. IRS actually loves, some of the documentation you keep along the line while working on the project. But any documentation you have, even if it's after the fact, we can make that work. So now is the credit delivery. The next in line will be the credit delivery, where we help you file the credits or provide support to your CPAs, to your credit preparers. So we can work with them to make sure that everything is being properly, the credits is being properly utilized. They get the particular line item which every figure should go into. And we can discuss with them and, some of the lessons we learned during the study and what you can improve on along the line for the next year's study.
So in general, in America, if you are working with a CPA or an accountant, they may be a tax filers, but R&D is an unique, like a specialization. So it is like a cardiologist, orthopedic. It's a specialized area. We are experts on that subject. We work for you in preparing all the calculations, and we would love to file your taxes. If not, we can also work with an accountant and CPA in explaining this, how you can claim this. We can fill a form for you, and the accountant, when he is filing a tax return for you, he can use this form to adopt the numbers. You don't have to change your current accountant or CPA when you work with an expert like us for R&D tax credits.
All right. Thank you, Anil, for saying that better than I can. So the next one in here talks about the audit support. The almighty audit. Should you ever run into audit with the IRS, we are here for you, because we'll provide you with all the information, all the support you need from start to finish. We will review your IDR, we'll review your notices with you, explain it to you what it means and what support and what documentation they're looking for. And as a matter of fact, our study is being prepared in such a way that we are always audit ready. Our deliverables are always audit ready for you to minimize the impact should there be an audit in the future. So I think that is all I have for R&D before I switch the gear to Section 174. I know some of you may have some questions, but like Annie mentioned, we will revisit that at the end so that, we can maximize both of our times on the call with you today. So Section 174. This talks, there are some new rules recently with the IRS, especially starting from January 1st of 2022, whereby the research and development expenses that are incidental to your R&D or improvements of a product can be included in your Section 174. And this is Section 174 deduction is more expansive than more than R&D. R&D is the Section 41. It is more expansive than that because we are in the R&D cost, we are only limited to 4 buckets of cost, which are the wages, third-party contractors, supplies, which may not be applicable to people in software industry, and their lease or rental of computer. Those are the 4 buckets of cost we have under R&D in Section 41. The ultimate success or failure, if you eventually discard or dispose of that product or service, is not relevant to the eligibility for Section 174. And it is all-encompassing in the sense that it includes every cost incidental to the research and development experimental cost. So it could be wage, which is already included in the Section 41 R&D. It could be supplies, which is already included, contract research, utilities, depreciation, attorney fees. Maybe you have some overhead expenses. You can also, include that in the Section 174 cost. And if you have, maybe you were applying for patents, you're incurring fees with your lawyers, with your attorneys, those costs could also be included. But in Section 41, those wouldn't be included. Next thing I have in here would be how to calculate or how to use the R&D cost. In here, we have, like I mentioned earlier, starting from January 1st of 2022, you are not able to fully deduct 100% of your Section 174 cost. It has to be amortized over 5 years. And with the amortization for 5 years, that will be the domestic cost. Any cost that is attributed to overseas for foreign costs, that will be amortized for 15 years. And the amortization begins in the midpoint of a taxable year. Say, for instance, you spent 100,000 in qualified expenses under Section 174. In the first year, instead of, taking 20% as deduction and amortizing the rest of the 80%, you'll be deducting 10% first, because it starts at the midpoint of the mid of the year. Then the following year, you'll be deducting 20%. The third year, another 20%. The fourth year, another 20%. The fifth year, another 20%. And the remaining of the 10% on the first year can now be deducted on the 6th year. But for that is for this domestic. For foreign, it will be amortized for 15 years. Now, specifically for software development industry, there is a new rule that specifies that software development must be capitalized and amortized. It cannot be deducted. So even after you must have, disposed of the research efforts or retire it or abandon it, maybe it's no more useful for you, the amortization still continues for the defined period of time, be it 5 or 15 years. So now, I think that is everything I have under section 174. In a short while, we'll be going through the Q&A you may have. So in here, the next slide talks about why choose AG FinTax. Definitely you want to, you want to determine if your efforts would be worth it at the end of the day. So you want to choose us because we're able to give you a free assessment to determine your credit eligibility and how much, it will cost you for us to perform the study for you. You want to work with someone with, over a decade experience in the business. And we have extensive expertise in place that can, help you maximize your credit, be it state credit or even federal credit. We're not limited to only federal. We go into state credit as well. We can, apply that for you. And, we are always audit ready. Our deliverable is audit ready, but that does not mitigate completely the risk of audit. So should you have an audit, be it for states or at the federal level, we are your, sidekick to go into the work with you. Anil, any points you want to add on this?
Yes. And what we are trying to do here is we will do a complete free assessment of your business, your operations, understanding of the nature of products, what you are trying to do. Then we will find out whether are you eligible or not. After that, we will do a range of amount, how much money you are going to get as a tax credit. That also we are going to give in the complete, it will happen in the free assessment session. After that, once you sign up, we will bring all our expertise into this. We have an exclusive R&D tax credit department here in our AG FinTax, and me and the department will be working together in identifying, going through in detail of all the documentation and help you to maximize how much money you can get it on R&D tax credit. We need to identify employee by employee, credit amount to amount. We need to identify whether they are eligible or not to avail this credit or not, the cost is eligible or not, expenses. So then apart from all this, we will prepare the forms. We will work with your CPS or an accountant in ensuring that you are optimizing all this benefit. And if there are any audit comes up, we are there for you. And if because we are submitting, we are helping you on the R&D tax credits. If any audit comes up also, we are there for you. And so yeah, this is what very high level. And just I would like to have a couple of more points. So regarding under section 174, there is a major difference between R&D tax credit and section 174. But when we do this credit analysis, we do consider both section regular R&D tax credits and also section 174 to optimize your benefits. You are incurring some expenses for the product development in India. Technically, you may not be eligible under R&D tax credit, but you may be eligible to get a credit, to get a deduction under section 174, when which will be technically, which is an amortization over the period of 5 years. If so 5 years or the other over the time. So there is a major difference. So when we do this analysis, we consider all this analysis section 174 and R&D, and we will help you to get you the maximum benefit by availing this R&D tax credit. And whenever you want to go for this credit, we can go back up to 3 years of tax returns, amend it, and we can avail those credits for you. Yeah. Go ahead, Sarifat. Next slide.
All right. Thank you, Anil. I think that is all I have. And if there is any questions our audience may have, we can open the floor for that now.
So you can see all our contact details on the screen. You can see on my back in the back end of my back in my back end also virtual background also you can see our contact details. Feel free to reach us if you have any questions, or you can just submit a form which you can see in the bottom of the screen. The barcode. You scan the barcode and you can sub. You can answer some basic questions. Then we will evaluate if you are eligible or not. If you are eligible at a very high level of analysis, then we will get on a call with you. We will ask you a lot more questions, then ensure that if you are eligible, then we will take up the file, and on average around 6 to 10% of the amount whatever is spending from your pocket as a R&D, you may be getting as a tax credit, which is a dollar to dollar. And I will see if there are any questions for me. Feel free to post your questions in the chat box of YouTube. Give me a second. I'm trying to see if there are any questions.
Okay.
Yep, there are some questions. Thank you,
Okay.
FinTax, for all the informative sessions. These are very helpful. Question: is project management and business analysis considered as a qualified task for R&D?
Is business management and what now?
Is project management and business analysis considered as a qualified task for R&D?
Okay, so we don't necessarily have to label it as that. So far, they meet the 4-part test. So the 4-part test will determine if the activities qualify for the credits. So if you're able to meet the 4-part test, especially on the technical challenges and process of experimentation, that will qualify regardless of the label you give to your activities.
Very good answer, Serifat. So, Venkat Noli. So, if you, yeah, you may be you may be terming that as a project management and business analysis. But if you can understand what exactly you are doing there, so that will help you. That may be helpful for you to decide whether you are eligible for R&D or not. So you can just submit a form on the by just scanning the barcode. We would love to get on a call with you to go through all the details, then confirm to you if you are eligible or not. Okay, good. This slide answers the question. Nice. Are these slides available after the webinar as I missed the first 30 minutes? Okay. So Bachu Veera, so this is recorded in YouTube. So you can go back and see at AG FinTax YouTube channel at any point of time. And because we initially there was some technical glitch, and we couldn't go on live stream on time, and even the YouTube that live stream link also got changed. So we will be sharing this recording with everyone over the email, and we will be also hosting one more webinar, a repetitive of this, on the Zoom session next week, because I noticed few people missed. They registered for the session, but they missed it because there is a miss there, because there is a change in YouTube live stream link. Okay. I don't have any more. I don't see any more questions here. And feel free to please subscribe to our YouTube channel, and feel free to share this channel with your friends and families. It's all about money. We are going to come up with many more in very informative content like this. So just subscribe to us. Thank you. Thank you very much. And you feel free to post if you have any questions. You can see the contact details and feel free to post your questions. And thank you very much. Thanks, Serifat.